Apple announced on July 30th, 2020 that it would do a 4-for-1 stock split in which a split took place last August 28th. This meant that for every share of Apple stock, that stock split evenly into 4 smaller stocks, the original 1 plus 3 additional stocks. That doesn't change the overall value of the company. It just means that investors who already own shares of Apple before the split got 4 times the amount of stocks but at a quarter of the value each, so that their overall value remained the same but split up into more stocks. Investors were able to purchase Apple stocks at the split stock price that following Monday at about $125 per share. Since Apple made that announcement, the stock has been up over 30%, going from $385 to a high of nearly $508. Apple has already recovered its losses due to the pandemic and is now trading even higher than before the crash earlier this year. It was up nearly $175 before the split compared to its pre-pandemic high. According to Apple's investor relations page, we want Apple stock to be more accessible to a broader base of investors. What this translates to is that smaller investors who otherwise felt Apple stock was too high for purchasing then can now buy shares in Apple at a much more reduced price. This will for sure attract a new wave of investors. The question now is, should I have bought Apple stock on Monday? Should I wait a few more weeks to see how things settle out? Or should I hold off until much later, since some have been predicting another stock market crash, possibly coming as early as before the end of 2020? The world is still dealing with the coronavirus pandemic, with more and more new cases occurring each day. There is yet no vaccine, with experts saying there probably won't be one until next year of 2021. So the situation will continue to get worse until it gets better. In the United States, there were 30 million Americans unemployed as of record in July, and with jobless claims still being reported each week. However, the Dow Jones has nearly recovered all of its losses since the pandemic, and the Nasdaq and S&P 500 are now at record highs. So what's driving the stock market? If you look at the numbers for Apple according to Zacks.com, the PE, price to book, and price to cash flow ratios are all higher relative to the industry average, suggesting that Apple stocks may be overvalued, but that investors are still willing to pay for the high cost of owning shares in Apple. However, Apple's numbers for net profit margin, return on equity, and debt-to-equity ratio indicate that the company is in much better financial health compared to the industry average. With all that the government is doing to keep America afloat by providing a massive $2 trillion stimulus package to beef up unemployment benefits, loans to industries, and providing aid to airlines, businesses, and to state and local governments, America is somehow managing to hobble along as they wait for something spectacular, aka a vaccine, to happen. But what about a second stock market crash that some will say will happen before the end of 2020? Will it be due to another resurgence in the coronavirus with the flu season just around the corner and still with no vaccine in sight? If this does happen again and with businesses just starting to reopen, this can put another shutdown to the US economy, and who knows how bad this time it will be. Is the market reacting to investor optimism that soon we'll get past this pandemic and be back to a normal life? Will the crash be a result of a stock market correction to put into check investor optimism and bring down stock prices back down to earth? Whatever the case may be, the wave of new investors buying up Apple stock at the much lower price may run up the stock's value. Or if there is no wave, the price may remain flat or even lose value. And if there's another crash, the price of Apple stock might go even lower like most stocks do during a crash, making it even more of a deal for investors who have waited to invest. No one can predict these things. One can only prepare in case there is another buying opportunity. And as long as you're not trying to make a quick profit or trying to time the market, buying and holding long term is always a good investing strategy.